So I wanted to share with you guys one of the things that I believe is the reason that traders lose all the time. And these two things are you're not taking TP and you're trading way too much. Let's go ahead and jump into the charts, and I'm going to show you guys an example of this on GBPUSD. And by the way, guys, I was just telling my mentee the same thing. I've said this so many times in my videos. I've said whenever price gets to an area where you should be taking TP in your head, go ahead and take TP. It won't fail you. You will be more happy that you've taken something off the table at least, or even close your trade, than if price was to turn back and just smash you up. So let's go ahead and jump into this right now. We're looking at GBPUSD. This is something I've just shown my mentees. Let's go ahead and put in some annotations. So we've got some annotations on. At the moment, GBPUSD is bearish. It's because there's inefficiencies in here. Look at this. We're trading into inefficiencies, this fair value gap, and we're pushing away. Not only that, guys, there's an up close candle in here from this low to this high. Up close candle, we trade into that and we push away. So far, we're bearish on GBPUSD. So automatically then, that just literally means that when price pushes up here into this daily inefficiency or daily fair value gap in here, from this kind of 6-week low to this one's high, that's another one, we're going to expect price to turn around in here and push to the downside. We're down the time frame now. We're on a 50-minute time frame. It was at this exact point when price was dancing in here, I told my mentees that this is my turnaround area. This is my area where I expect price to turn around. It's within my daily imbalance. We're right at the top. And just to show you guys that, I'm going to go ahead and put this on the screen. I'm on my Discord right now. This is my GU analysis for the week. So you can see when I scroll down, here I'm saying seen selling at buy candles and a gap with no sell side at the lows. GU is within my PY for a turnaround. So just to show you guys what we're looking at here, GU is at my PY for a turnaround. So this is exactly here when price is dancing around here. So when I said seen selling at buy candles, it just literally meant, let's go back to the daily time frame. It just literally meant, look, we're seeing selling at buy candles. When price traded up into this buy candle, we saw selling. That's what I just literally meant. So let's go back down to the 15. So we have an up close candle here where we got in at the lows, where we got in 50%. Really and truly, it doesn't really matter. This is not what that video is about, because you guys know we like to enter at institutional candles. But what this video is really about is this down here. So let's go back to the daily time frame real quick. I'll show you this gap. There's a gap in here. This is where we closed off on Friday, I believe, right here. This is where we open up on Monday. So that means there's a gap inside here. When we go down to the 50-minute time frame, now you know what we're looking at when we come to this purple area over here. We've also identified some sell stops here as well, so just so you guys know. But once price starts moving, going to the downside, we're going to go and hit play a few times. Let's go ahead and hit play. Right, so guys, we're into the next day, and now we're beginning our push down to the downside. We're seeing a large move to the downside like this. It's telling us that price is dropping now. When I said taking TP, where are the two best points to take TP? The two best points to take TP are when price gets back to the top of the gap, the very top of the gap. And let's just say you've taken partial profits, or let's just say you didn't take TP, which I don't advise, by the way. The next point of interest should be the sell stops, the very low. If you've not taken TP, it should be down here. So let's hit play a couple more times again. You can see we make our move down to that area right here, right down to the very highest point of this gap. It's going to be very sensitive at this point. So you have to take TP at these areas where the price is going to be very sensitive. This is a point of interest where you would have taken TP. And then you let your runner, whichever trade you was in for the previous day, maybe you had to hold it into this day. That's how deep it was. Or whether you jumped in on the Wednesday, you know, this was Monday, Tuesday, and Wednesday. This is where you're going to be taking TP. And then what you do is you put your runner into stop profit. And I've left this open for you guys to decide where you would have entered. Just go back and check. There's institutional candles. You can go ahead and look at where you guys would have entered. So now let's hit play some more. Again, you can see price comes back to the gap. And if you didn't take TP already, this is your second chance to take TP. Take profit, take something off the table. Because like I said, it's a very sensitive area, these gaps. And now let's keep it moving again. Let's keep it moving. Let's go ahead and hit play one more time. You can see we run straight to the sell stops. Straight to the sell stops. And let's go ahead and pick up my Discord again. I'm telling people, GU gap traded to. Now to see if it closes beneath or if it closes below the gap on the daily time frame. That's what I was looking at. But anyway, guys, we've reached our level here. So I'll just let my mentees know that basically we've reached our TP level. The runners can do the rest. This is it. And at this point here, this is not where you should be adding on trades. This is the third point. If you're looking to catch the high and take it to the low of the day, this is what we're looking at. This is the very third point, your third chance. This is the third chance that's been given to you to take profits. And like I said before, whenever price runs out liquidity, there's a tendency for price to turn around. Hence why you have to take profit whenever price does something like this. And what you don't want to see then is this. You don't want to see price trade back through any kind of short-term high here. This is a potential down close candle. If price close back above, be out your trade. Don't be that person still trying to be selling when price trades through one of these short-term highs here. That brings us on to our second point. They're trading too much. If you've caught a move like this, anywhere from these highs to these lows, from these highs here to these lows, then you're done. That's you done. That's the trade done. Let your runners do the rest of the work. That's the job of the runner, guys. The job of the runner is to do the hard work, to do all the emotional work. If you had your full trade in here, now you're thinking, oh, is price turning around? Is it retracing? Is it pulling back? What's going to happen? Is it reversing? Is it going to stop me out? That's the job of the runner. You have to assign part of your trade one row and the other part of your trade the second row. So the first row is to get down to liquidity. That's the bulk of the trade. Then the second row is to firm all the emotional roller coaster. That's the runner, the remainder of the trade. So I like to do 80-20. So 80% taken off at liquidity and then 20% run up. And then let's hit play a few more times, because I told you guys, look, you can't be trading too much. This is why some of you guys blow your accounts, because you're thinking, oh, price is going to continue to the downside. Price is going to keep on dropping. It's going to keep on dropping. It's going to keep on dropping. And what happens? Price keeps on rising and it keeps on rising. Let's go ahead and hit play again. You can see here, look, we spend more time down here. More time down here. Just bear that in mind, guys. We're not really going anywhere though. So some people are still trying to get in from here. They're still trying to get in from these lows. We've just run liquidity. We've just run liquidity. And so let's hit play again. Look at this, guys. Now we have a down close candle in here formed. When you see something like this, let's go ahead and mark this up now. When you see a down close candle formed here, from there to there, when you see a down close candle formed here, when price trades through this high, you are done trading. If you have a stop loss anywhere up here, you either move it above this gap, or if you was trailing your stop, let's just say price was got to this level here, and then you move your stop loss above this high here or above one of these highs, just leave your run alone. If you're still looking to manage that trade, then you can be dropping your stop loss even more. But just know that when you're trailing your stop loss, you're most likely going to get taken out anyway. Leave the trade alone. This drop is, for me, now is over. It's done. I don't want to touch it now. I can come back the next day to see what price looks like at the time. What I would do back in the day, and I know what some people out there are doing right now, is they'll still be trying to sell GBPUSD at this point. So what's happening is, go ahead and put this all on. Let's keep playing. Look at this. We play, we trade through, we trading through certain levels. We're going higher. We're making higher highs and higher lows now, guys. You shouldn't be trying to sell no more. Trying to sell, you keep on trying to sell. Guys, the sell is over. I'm speaking it because this is something I used to do. I would wait for price to come up to more levels and I'll still be trying to sell. Sell again, then I sell again, and I sell. Then all the wins I have along this drop, or all the profit I've made, I've now given it back to the markets. So this is one of the #1 reasons why you guys keep blowing accounts, why you guys can't grow accounts. It's because of this. It's because you don't know when to take TP, and then you keep adding onto your losing positions, and you keep on trading over and over and over again. I'm gonna hit play again to show you guys more. Look at that, we begin to drop again. We get close down to this level now. Look at this. This is that institutional candle play. Let's expand it out to the right. That's that institutional candle play. You guys know about my institutional candle series. Go ahead and check it out. I'm going to be doing a new video on just institutional candles and how to identify them. But that's not going to be this video. That might be my next video. But this is that institutional candle play. It drops right down into our institutional candle, high to low. And then let's go ahead and hit play again. You guys still thinking, oh, cool, this must be the retracement and then the pullback. Let's hit play. Look at this, guys. Price is moving mad. So imagine you get caught up in all of this now. What on earth is going on, guys? Imagine you try to sell again, you got taken out, tried to sell, got taken out. You've blown your account, you've blown all kinds of accounts, you've lost all your profit now, all because you didn't know when to stop trading, you didn't take TP, get to adding positions, adding, when really and truly the trade, this move was done. So this is why when price gets down here, you're taking something off the trade. Let your runner firm this. Let your runner play out this. This is your runner's job. not your job. This is not your main position's job. This is your runner's job. The beautiful thing about all of this is if you've taken 8% off the trade, when price is doing all of this, we don't care. It's as simple as that, guys. We don't care. I know we all experience this, and we've all done it before. We've all made profit and then given it straight back to the markets. This is a prime example. Get to your area of interest, let your runners run, and then go about your business.